big decliners in trading today is Coinbase, off almost 7%. This is a company that, of course, its fortunes are tied very closely to the price of Bitcoin, which has been down since early October. Really has been a bad news story for anyone who's been long Bitcoin. Paul Goldberg is our senior equity analyst here now to help us take a look at what Coinbase is likely to report. And Paul, we already heard from Robinhood that crypto trading revenue declined, and that's a big reason why the results disappointed investors. How much insight can Coinbase offer through its forecast on where it sees crypto prices headed?
Yeah, thank you, Scarlett. Coinbase doesn't really give forecasts about the crypto price direction. They do usually provide in the earnings call the current month activity, so probably they'll give us something that happened in January, maybe early February as well, but they really don't do predictions. They do provide guidance on the subscription and services revenue, and that has been holding reasonably okay. So if we look at the fourth quarter, right now the expectations are for the trading revenue to be down about 35%, but for the subscription and services revenue to actually increase about 15% from last year. So it still has some impacts of the lower Bitcoin prices and activity levels and Ethereum prices and so on, but it's still kind of grinding higher.
So, Paul, as an investor, equity investor in Coinbase, are there metrics that I really need to pay attention to, or is my performance simply at the whim of the underlying token, that being Bitcoin?
I think what you want to look at is a few things, and they're probably longer term than just one quarter. Number one is the institutional adoption. So you see all the companies from JP Morgan to Bank of New York and so on getting into that business, and you did mention Robinhood, obviously, which is sort of a competition for them. So there's more and more institutional activity in that space. Number two, in December, they had a company call, which I think a lot of people didn't pay too much attention given it was right before the holidays. It talked about everything exchange, where they're trying to compete across many financial services, getting into prediction markets, tokenized securities, providing payments. It's kind of very early days, but they're really trying to become a financial supermarket. So any kind of additional color or things they're going to talk about, that's going to be really useful in the call.
And I guess that begs the question, won't that involve increased costs, increased expenses to build out that infrastructure to make itself known as an exchange for things other than crypto?
Well, I think they're close to $1 billion on the expenses a quarter, putting money into the business, and they've always been very kind of open-ended in terms of putting money to work. I think what plays well for Coinbase is their cash pile. So they have about $12 billion of cash. If you take out the USDC, which is some people consider cash, but is a stable coin, so that's fairly stable, it's $9 billion. So it's a lot of money to run with, and as long as their earnings stay positive, they have a good runway for investments.
Paul, thanks so much. Appreciate it. As always, Paul Goldberg, he is the senior equity analyst at Bloomberg Intelligence based down there in Princeton, New Jersey.